macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Well, in this era of high-frequency algorithmic trading, try saying that 3 times, do the machines actually rule the markets? That's what we're going to talk about with our tactical trader, Kevin Cook, who I'm sure has some definite thoughts on that. We've been hearing a lot about this lately. You've got some background with this type of trading from your currency trading days. What is it that you think investors and traders need to understand about what's going on with this?
You know, there's so many issues here, and I have a lot to talk about. I've got a swirl of notes here. I'm going to try and concentrate this down and make this useful, and then we can chat about it later in the blog notes below the video. But so when I started trading currencies, I started in 1999 trading with the introduction of the euro, and in 2001. And this is electronic trading. We were market makers in the currency futures, and we went to the cash market, which is a $4 trillion a day market, and that's where we offset stuff. So we were trading in both markets to make the futures liquid. Well, in 2001, when I was trading the Canadian dollar during the daytime hours and volume was moving from the pit to the machine, I started noticing this unusual activity. These traders would come in, executions would, buy, sell,
right.
And there was a rhythm and a pattern. It was very automatic. You could tell that like a price would trigger a price. I was like, this is very strange, and I dubbed it Robo Trader at the time. This is 2001, and I didn't know anything about automated trading, and nobody was even using the word high frequency or algo. But that's what we were doing. We were high frequency market makers. So slowly you started to see these automated programs come in. Somebody builds a technical model like, we want to do this with stochastics and the MACD and RSI and moving averages, and we buy here, we sell there. You could hire a quant, just take a math grad right out of school and say, hey, you got programming skills? Program this for me. Then we're going to, have it be software, goes into a model, goes to a server, and the exchanges started saying, yeah, bring us your servers. We'll set them right next to the exchange, right next to the match engine. They call it co-location. And so this has been building. It started really big in the futures. It's going on in the equities, and it just keeps building momentum. The Robo Trader that I figured out I was trading against in 2001 was actually Monroe Trout. Now, anybody who's read any of the Market Wizard books, Monroe Trout is featured in there as a great trader. And he was running an automated program, former pit trader who said, hey, I'm going to let some of the machine do my work with my ideas. So, this is the kind of thing that's been going on, and, it's grown tremendously in the past 10 years.
Well, there's people on both sides of this argument about restraints and controls, but wasn't the flash crash in May of 2010 a good example of what can go wrong with this type of trading?
Absolutely. I mean, it made everybody think of 1987 all over again. You remember that day.
Yeah.
So, and that was just the beginning era of electronic trading, where you had institutions doing, program arbitrage against the S&P futures, and something cascaded, boom, 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 and took the market down. 500 points in a day. So the flash crash was similar, right? Something went wrong. A big order came through. It started triggering lots of sell stops.
Right.
And when you have automated market makers, where the program is just doing the market making, and those bids come out, then all the stops start getting hit, and the machines start eating each other. So at the time I said, hey, technology is good for the markets. Look what it's done for the individual self-directed investor to be able to have access and speed, access to the markets that the pro only dreamed about 10 years ago. Now the self-directed investor has that. So we can't put that genie back in the bottle, and we don't want to. But maybe we need some speed bumps to prevent these things, And one good effect here is that the machines will eat themselves. So not all those guys out there with their quant models and algo machines are making money. And some of them lost a lot of money during the flash crash, and they continue to eat each other up. So there's this ebb and flow, but we're not putting technology back in the genie bottle here. It's here to stay. So we want to adapt to it. Now, what I want to talk to you about today is a perspective where we can trade the market. The machines are playing the ranges, and the machines, they'll take their 2 to 5% home every day. The hedge funds and the algo shops that are doing this, and they're happy with that. They don't need the big breakout. So in a sense, conventional technical analysis is not working like it used to because the machines play the ranges. I want to introduce you to Michael Harris. This is one of his books. This might be hard to see because he made the cover of this Wiley book. He made it real shiny, high tech, right? But this is a guy that I follow because he's a quant who says, okay, let's build a system. We're going to back test it, and this is how you make it robust. Because what do you want? You want it to be profitable and robust, and and not turn into a disaster for you. So this is what he teaches with systematic trading. Define your rules,
right.
Take the emotion out of it, program it. This is what Michael Harris teaches. So, and this is a chart he threw up on Tuesday morning at like 3 a.m. I happened to catch his Twitter feed. He posted this chart, and he's talking about how this market is fooling so many people who are conventional with technical analysis. And it's so true. I've been a buyer of the dips here, and this is the channel we're trading in. And so he put this out before Wednesday's open, which took us to the top of that channel. This is the spiders, by the way. So we went up to 1460, and now we're going to pull back. Now, I'm a buyer on all these pullbacks down here, while everybody's saying, oh, this economy's going to heck, and get short, and you can't win. The machines are playing the ranges, and this thing is poised to break out to new highs. That's my belief, and I'm playing a high probability bet that way. And Michael Harris is looking at it the same way, where he knows that a lot of the conventional stuff isn't working. You try and play the breakout, that's where the algos are selling, and you're thinking the market's going to crack 1430 on the S&P and we're going lower, and that's where the algos turn around and buy it, and they just rip it up and down until there's a new sustained breakout, which I think is coming. So,
and Wednesday was October 17th.
Right. So they basically, somebody can program these machines to exploit, the average trader, and hopefully the institutional investors are happy with their positions, and they'll sit tight. So they've watched Apple go from 700 down to 625. They're fine, but it's the smaller traders getting hurt.
Speaking of Apple, so you're still bullish overall in the market?
Yes, I am.
Just okay. But there's a sense out there that as Apple goes, so goes the rest of the market, and again, people on both sides of that issue. So, what do you say to that?
Well, Apple is almost 4.7% of the S&P 500. But what's interesting is Apple's 10% slide didn't take the S&P down that much. So there's good news there. And what that tells me is we can have that disconnect where the market can trade higher even while Apple's weak. It's not the entire market. This morning, Thursday morning here, BMO came out and downgraded Apple and said, you know what, we're lowering our price target to 730. While Barclays is like, no, we still think this thing's going to 930. But that's probably an 18 months price target. So, great company with great prospects, but it doesn't mean that this stock can't trade down to 600. I want to take a look at the Russell 2000 real quick. This is actually a chart from end of day Tuesday, but what's significant here is the move up. I'm long TNA for my subscribers, which is the triple leveraged on the Russell 2000, and the close above 840 yesterday was great. Like to see it close above 845, then we can move higher. But we've had this big run. You see these gaps up here? This market's going to consolidate a little bit, and but we're still playing this trap that Michael Harris calls it, where people can't figure out which way it's going, but you need to just stand back and say, okay, what's the big trend, and then where do I look for the buy and sell opportunities? One last thing, the VIX. Nobody's talking about the VIX right now. It's very low. We could have a surge in the VIX if this market surges to new highs and then corrects. This is Marty Chenard on StockTiming.com looking at this VIX just getting crunched down, which is what happens during these kinds of rallies that surprise everybody. VIX just keeps getting lower and lower, and hugs 15. Well, he's looking for a breakout here, but that's assuming that the market has to fall first for volatility to rise. I think we make new highs above 1500, and then we'll have some kind of correction that'll make it pay to play volatility. Right now, it's still all these volatility ETFs like the TVIX is trading for $1.30 right now. They just those are losing bets.
Interesting. All right, keep an eye on Zach's real-time
Our blog, Real-Time Insight.
Right,
yeah.
Insight. That's what I was thinking
we
of.
Give it a fancy name, but we call it RTI for short.
Real-Time Insight, because there's where you can get a lot of Kevin's last-minute thoughts and day-to-day thoughts on what's going on and the changes going on in the market. Sometimes these weekly pieces, provide too big of a window in between changes.
To ask questions at the bottom of this video, about any of this.
That's right. I was getting
any of
to
these
that
topics.
as
I'd love
well.
to talk about them because there's 100 different directions to go here.
That's another way for you to engage with Kevin in these weekly videos that he puts out on Zax.com as well. All right, all of that opportunity out there for you. Take advantage of it. With Kevin Cook, I'm Terry Ruffalo.